Hello everyone, it's Davide here and welcome back to Learning Finance. In today's video guys, we are going to talk about a simple question. Should you sell all your stocks because a new huge crash is coming? So leave me a like and subscribe to the channel and let's not waste time, let's begin. Alright guys, so I'm seeing online a lot of panic, during the last couple of weeks. A lot of articles talking about the next stock market crash, and stock market crash is coming, it's going to be bad, it's going to be worst, it's going to be the worst crash we have ever seen. We are going to enter the worst recession and depression we have ever seen, all those kind of things. And also on YouTube you see a lot of guys just making video about that they are selling stocks because the worst is yet to come, because the prices are going to go down, and they are pretty confident about that. But as investors, as long-term investors, is it something smart to do? In my opinion, well, let's take a look at some data here. So this is a report from JP Morgan, the asset management division. And here it's pretty interesting. Here we have the 20-year analyzed returns by asset classes, and from 99 to 2019, and we can see that we have the S&P 500 that has done 6.1% annualized return, and the gold, real estate, 60-40 portfolio, 40-60 portfolio. And after all of them, we have the average investor. Here is the average investor that has performed just above the inflation. And you can tell why is that. Why is that? So to understand this, let's take a look at the market. The general trend, S&P 500, as we all knew, is a high trend. With 2000 crisis, 2008 crisis, and the huge bull run, and now where we are now. So we are going up over the long run. I mean, no doubt about that. But what the average investors do, a lot of them, a high percentage of them, they do things on panic. They do things on panic. Most of the times they don't even know why they are buying or selling something, and why they are buying or selling that stocks, that company. They don't know why they own it. They don't know why they bought it. They don't know why they like it. They don't know if they like it. They do things because everyone is doing stuff. They have the panic and the fear to miss out on something. So what the average investors do, they try to time the market, and they time to market in the completely opposite way. Because a lot of researches and statistical data, they say that the average investor, they buy when prices are going up because it's a panic buy. Everyone is buying, so they have to buy too. They don't know why, but they are buying. They are following the hype, the herding mentality to do stuff. They buy. So they buy high, and after that a market crash happens, because it always happens, and they hold the stocks during the market crash. And once the market has crashed, they say, well, here it starts the negativity. Everyone around is panic selling. All the informations are bad. Everyone is saying, like now, articles, bad stuff, the worst is yet to come, all of that. And guess what they do? They don't know why they bought the stocks in the first place, and now they have them, and they say, well, you know what, I'm gonna sell everything now because it's gonna get worse. And they don't know why. They don't know if it's really gonna get worse. It's just a herding mentality. Follow the momentum, follow the news mentality, and that's what's happened. They buy high and they sell low, and they make a loss. And guess what? Eventually they come back again. okay, they come back again. And a lot of the times they come back again. So the market bottoms out and start to climb. And news are always bad, okay? They continue to be bad, but the market is going up. And eventually they come back again probably when the market starts to push high to do news highs, and everything comes back positive. So the average investor say, oh god, the stock market has started to pump again. That moment I don't have to miss out. And it comes back again. It comes back again late, and so he missed a lot of the profits. And so if you do that over the long run, you are gonna underperform the S&P 500, okay? And most of the times those guys they lose money, okay, over the long run. So that's why, guys, panic buying and panic selling, and selling stuff that you don't even know why you are doing it. That's the motivation why that is happening. So here, guys, it is one thing: understanding the difference of what you are doing. Are you a trader or are you an investor? And what are you doing with that portfolio? Do you want to do trading or do you want to invest? Okay, that's a different. In trading, you can buy and sell in the short term, intraday. You analyze the stuff with technical analysis, finding patterns and Fibonacci retracements, Elliott waves, all those things. It's complicated, it's a fast, and it's something most of the times for professionals, okay? It's very speculative and things like that. You try to exploit up and downs in the market. So you buy and you sell and you buy and you sell again. It doesn't very matter the fundamental analysis of something. What matters is just the price action during the short term, okay? While on investing, it's completely different. Investing long run, fundamental analysis, buying good businesses, and you want to create wealth over the long run. It doesn't matter if tomorrow the market is going down. It doesn't matter. What matters is it in 10 years time we are going to be higher than this, okay? And the business you picked, they're going to be good businesses that they have to survive and they have to be there in 10 years time, okay? That's the most important stuff. So that you need to have clear in mind what you are doing and what you are buying if you are an investor, okay? And so should you sell everything right now? Why? Explain me why. Why should you sell everything now? Okay, why? If you wanted to sell to take some profit, you should have done that back in December, January, when the market was clearly too overvalued to continue to go like that, okay? But right now, it doesn't make sense, okay? Right now, there is only one motivation why you should or you should not sell. There is only one thing you have to look at when it comes to investing. And that thing, guys, is fundamental analysis, okay? Fundamental analysis. When you bought your stocks as an investor, you have performed a fundamental analysis. So you know the business, you know what they're doing, you know their balance sheets, and you know why you bought those stocks, okay? Now, should you sell now? The answer is go back and see the fundamentals of the businesses you bought, okay? If those fundamentals are changed, well, so yes. If they are changed in a negative way, means that what you thought before is not gonna be the same in the future. So your past analysis are changed. Well, at the moment you should consider to sell or reduce the positions, okay? But if nothing is changed, well, why you should sell now? the business if was good and now it's still good, well, okay, we had this problem, but we are gonna go up again. Okay, things are gonna go better in the future. Okay, so now it's just a moment that can last also 1 year, 2 years, but you are looking at the long run. Okay, you are looking at building something over the next 10 years. Okay, it's not the next year, not the next 6 months. Okay, so if those fundamentals are not changed, so why you should sell? It doesn't make sense. You sell now to be back when? You sell now because you think that a crash is coming. You don't know if it's coming. Probably it is gonna never come, okay? Or if it comes, you don't know when. Or you don't know if it's gonna come, okay? To understand what I mean, let's look at this graph. It's also from JP Morgan. And let's take a look. These are the S&P 500 total returns, okay? And dividends versus capital appreciation. So you have dividends in blue and you have capital appreciations in gray, okay? What we have that in the 50s, it was like this, 5.1, 13.6, and 60s, 70s, 80s. So you see you have different periods, different performances, okay? 2000s, not very good. But over the long run, guys, over the long run, from 1950 to 2019, that's what you had. That's what you had. Overall, you had a sum of 7.8% in capital appreciation and 3.4% in dividends. So you should sum those two things together, and it's a lot. And bear in mind that during those periods here, you had a lot of stuff, okay? You had 9/11, the 2000 crisis, 2008 financial crisis, Vietnam War, all those kind of things, the inflations with oil prices in the 70s, all those things, okay, all those things. And every time it looks like it's the end of the world. That's what they say. This time is not as previous times. This time is gonna be worse, okay? But guess what happens later on? We come back to normal. And over the long run, as investors, if you buy nice and good businesses, if you look at fundamentals, and if you still believe in those fundamentals, why you should sell? Don't follow the panic. Don't make this mistake. What it's really important is that you know what you are doing and you know what you are buying, okay? So I'm gonna leave you with this clip. This is the end of the video, guys. Look at this clip from Peter Lynch, which is really makes you understand what I'm saying, okay? And see you in another video, guys. Leave me a like, please, and subscribe to the channel. Leave me a comment below. Have a wonderful day. Bye.
I made 10 or 15 times my money in Dunkin' Donuts. Those are the kind of stocks I can understand. If you don't understand it, it doesn't work. This is the single biggest principle. And it bothers me that people are very careful with their money. The public, when they buy a refrigerator, they get a Consumer Reports, they buy a microwave oven, they do that. They ask people what's the best kind of radar range or what kind of car to buy. They do research on apartments. When they go on a trip to Wyoming, they get the Mobile Travel Guide, or California. When they go to Europe, they get the Michelin Travel Guide. People will hear a tip on a bus on some stock, and they'll put half their life savings in it before sunset, and they wonder why they lose money in the stock market. And when they lose money, they blame it on the institutions and program trading. That is garbage. They didn't do any research. They bought a piece of junk. They didn't look at the balance sheet, and that's what you get for it. And that's what we're being driven to, and it's self-fulfilling. The public does terrible investing, and they say they don't have a chance. It's because that's the way they're acting. I'm trying to convince people there is a method. There are reasons for stocks that go up. Stocks are not lottery tickets. There's a company behind every stock. If a company does well, the stock does well. It's not that complicated. People get too carried away. And first of all, they try and predict the stock market. That is a total waste of time. No one can predict the stock market.